Welcome to our webinar, Dentists, Are You Getting All the Credit You Deserve? Employee Retention Tax Credit, ERC, presented by Chuck Thornton on March 10th, 2021. If you would like to collaborate on a webinar at no cost for your colleagues or with your trade association, please call our office for details at 602-678-7067 or send an email to info@rcthornton.com. We would love to work with you on your business topic of interest. It is my pleasure to introduce you to our speaker, Chuck Thornton of RC Thornton and Associates CPAs. Chuck works extensively in the tax area. He is an author, lecturer, and frequent webinar presenter. His firm's mission is to help clients achieve financial success. That means saving on taxes too. Chuck's background includes being a CPA, personal financial specialist, charter life underwriter, and certified financial planner. He is a graduate of New York University with a master's in taxation. Please don't hold this against him, but he did work for the IRS a long time ago. Chuck is also owner of RC Thornton Financial Solutions, LLC, another CPA entity specializing in investment planning. Welcome, Chuck Thornton.
Well, thank you, Kit. I appreciate that introduction. And of course, we have to start off with some administration tidbits. I just want to say the presentations for general information. The variations on this credit is all across the board on how to do it. So for a specific application, if you happen to have another accounting firm that's doing your work, please talk with your accountant or consider talking with us. And of course, with our clients, let's get together and start talking about this pretty soon. The presentation is 30 minutes long. It's detailed. It's more of getting into the weeds and understanding this. I would suggest if you don't have 30 minutes right this minute to do it, that you maybe bookmark or not bookmark, but you look at what the reading is for the position on this slide and you come back and look at it later, because you will get so much more out of this if you actually take the time to look at it. There's money to be made on this, and I would say most dentists can have something coming back. So now with that said, it's worth it to really take a minute and spend 30 minutes. If you happen to want a copy of the presentation, just send an email to Kit. She'll be getting those at info@rcthornton.com. Just send an email, just say, here's, I'm Bob Jones or whatever it is. Please send me the dental tax credit PDF. Sometimes it's easier to have the handout after you've listened to this. So we'll certainly provide that for you. Overview, here's what we're going to talk about. The general description of this credit is refundable. The bottom line is you can get money back. What is a qualifying dental practice? What's qualifying wages, payroll processing services, and your next step. Each of these items I'm talking about will start making sense as I'm evolving. Just keep on saying to yourself, there's a possibility that I can get money back. We're seeing dental practices with 3-4 people getting around $7,500 back, people that maybe have 8 people altogether, somewhere in the range of $15,000 back. So not bad for a couple hours worth of work when you really think about it. So don't dismiss this one. There's 2 sets of rules on this. It depends on the time period. I'll tell you which ones in a moment I think will be most applicable to dentists. There's a period that covers March 12th, 2020 to December 31st, 2020. It is indeed a lower credit amount. It's 50% of the first $10,000 of wages per year, which means you're only going to get $5,000 credit at most times the number of employees, omitting yourself as the owner of the business or any related party. So if you happen to have a staff of 6 people, and let's say that during that year they made $10,000, it's possible that you might get $30,000, but there's so many other rules to this. I would just say in that scenario, you might get less than that. The other period is January 1st, 2021 to December 31st, 2021. They just changed the date when they signed that new law just today. Hooray. It's a higher credit amount. It is 70% of the first $10,000 of wages per quarter. Now, I'm going to alert you that most dentists probably will not get this only because their operations were closed, according to the government, in 2020. And right now, I think a lot of people are experiencing and enjoying the pent-up demand of people getting work done. So you may not qualify. I'll tell you the mechanics for it, but it may not work for you. My focus is on this March 12th to December 31st is where we will put most of our time. Okay, general description of the credit. I've already mentioned it. March 12th to December 31st, 50% of the first $10,000 of qualifying wages per employee, meaning what's qualifying wages, Chuck? I'm going to get to that, okay? And for January 1st, 2021 to December 31st, 2001, 70% of the first $10,000 wages, and they just changed that. If I had talked about this 2 days ago, I would have said it's only for the first 2 quarters. Now it's for each quarter of 2021. And if you did my math, that's $7,000 per quarter times 4 is 28. It's possible. I'm going to say it's probably not going to be that practical for everyone to get that much money, though. So if we're talking about something in 2020, and there was a credit that I could have taken in 2020, then how come I didn't get the credit in 2020 during that period of time? And there's a good reason for it. We started actually going to dentists in 2020, and we started doing applications for this credit. And then they came out and they said, oh, if you got the PPP loan, remember the PPP loan? If you got that, you carte blanche don't qualify for this. Well, everyone got the PPP loan. We had to shred the paperwork. No one was going to get it as of 2020. Then when Trump signed the tax law December 28th, they effectively said, oh, we were just kidding. You can go ahead and get that credit for 2020 only to the extent you did not use the PPP loan for the forgiven labor. You did not use it to pay labor. And for people who had the PPP loan, which is most of you guys, you only had to use 60% of your labor to get forgiveness, and you had to have other expenses. So it's important that if you have not filed your application for forgiveness, stop, don't do it until this is resolved. Because some people are taking shortcuts and saying with 24 weeks, I just put all my labor down and it was too easy. I didn't have to go get rent and things like that. Well, you might have talked yourself right out of getting some of this credit because then you used all the money for the labor. So don't file those things yet if that's the case. Is it too late for 2020? No, it's not. We can go and file amended returns for 2020. We'll talk more about that later, but that's where you're going to get the money back for 2020. Okay, qualifying dental practices, government shutdown orders. You can look at this if you like, get a hard copy, you can look at it, but the Reader's Digest version on this is this. Some governmental guy, governor, locality, municipality, whatever, who had the authority to do so, came out and said, you have to cease and desist operations. You're not a necessary business, essential business. You can't do business there. And this happened to restaurants and lots of other places too. And for the dentists out there listening to this, your orders came out March 12th to May 1st. This is 2020. You couldn't see patients in your office. I think there's limitations on emergencies or something like that, but you could not, by and large, conduct business in your location. You were subject to shutdown orders. I'm going to talk about another test. That's with gross receipts. But this is test number 1, and you only have to meet one or the other. This is why I'm pretty comfortable saying most dentists have money coming back. The question of it is how much and is it worth the time? We'll have to discover. But most of you folks have business money coming back if you are in practice. And so therefore, that is pretty much the idea of what a shutdown order was. You had to shut down. It wasn't your fault. And even if you got back in each quarter and you made it all back and your volume even was better than what it was in 2019, it doesn't matter. You were subject to a shutdown order. So that's one test. Okay, shutdown comments, watch for your normal working hours, the impact by suppliers. Some people couldn't get supplies. I found this more in other industries, but some people couldn't start back May 1st because they had to kind of get their act together. They had to get the office open. They had to get supplies, but they were impacted by that shutdown order until when they opened up. And not necessarily for you, but I always tell people, some people could be working in different states and they were shut down in one state but not another. And the idea is you were shut down wholly or partially. And the interpretation of that was Basically, you shut down more than 7% of your operations is a recent ruling that came out. There is also a negative aspect on this. If you were shut down, but you had the ability to work via telework, well, you guys couldn't do that. We could. Can you believe it? Accountants were considered essential businesses. But even if we weren't, we could work at home. We could use the telephones. We could use the computers. But there's no way in the world you could do more. You could do dental work over the computer. You might talk to people. You might have update files, but you really couldn't do dental work. Again, this rule, although it wasn't defined just for dental practices, fits you guys perfectly. Okay. Now, qualifying dental practices shutdown orders, it's during either one of those periods that we've been talking about. However, I don't think anyone's subject to a shutdown order January 1st to December 31st, 2021. But if you're in a municipality somewhere where you are, well, take that into consideration. Okay, qualifying dental practices is your dental practice was subject to some type of government shutdown order, which we've been talking about, which causes a partial or full suspension of operations. I talked about the 10% number, or your dental practice suffered a reduction in volume. That's a mechanical test. Number one, someone else caused it. They made you shut down. The second one is your revenue decreased. I'll talk about that in a moment. And it really doesn't matter why. I guess you could go on vacation and had a reduction in revenue. And if your reduction in revenue qualifies, then you still can get the credit. So we need to examine both, but I think it's going to be the shutdown that's going to be pretty much. So qualifying practice, suffering a reduction in volume by mechanical test. In 2020, in any one quarter, you had a 50% reduction in any one quarter of 2020 when compared to 2019. So if you had $100 in a quarter, second quarter 2019, and you had $50 minus a penny, $49 and something, then you have a 50% reduction. And then each quarter after that only required 20%. From the dentists that we're working with, even though they might have been subject to shutdown, no one so far has come up with a 50% reduction in any particular quarter because this shutdown order straddled. Remember, you had January and February, part of March already do the work. May meant you had May and June in the second quarter. So the odds are you're probably not going to qualify for the 50% reduction. 2021, a 20% reduction in any quarter going till to the end of the year compared to 2019. So if in January you had $80, but in January of 2019 you had $100, well, there's your 20% reduction, maybe minus a penny in that example. From the dentists I'm talking with, no one pretty much is having that situation. The deferred backup log is coming through. Who knows? Maybe you take a vacation in one quarter and you close things down and you had taken a vacation another quarter back in 2019. Maybe it might work, but the odds are it's not. And so I want you to know it's there, but it probably is not going to fit your situation. Okay, gross receipts test is defined under a section 448. And basically, in a nutshell, it's the method that you use for filing your tax return, which a dentist is always the cash method of accounting. It is your cash deposits from patients who write you a check. It is your cash deposits from the collections from the insurance, not when you bill the insurance, it's when you collect it. Just keep on going back to what am I doing for my tax return method. I've had a few people start giving me their production numbers. I said, no. All that matters is your cash collections from those two sources. Okay, by the way, I just want to remind you, it's a mathematical test on the cutback. Doesn't matter why you had it. But one question I get from people first thing out the bat is, how if I just hang on to my checks, the checks that the insurance company sends me, the checks that I get from my patients, I'll just put them in the drawer and I'll deposit them in April. Is that okay? No, it's not. That's called constructive receipt. And that means when someone has given you the money, you had the right to it, but you kind of turned your back to it. And you said, no, I won't take it yet. You're still going to have to include that in these calculations, just as you'd have to do it if you were going to include it in your tax return. Okay, so we talked about Are you even in the game? And you're in the game, you hit the first base, you're playing ball. If you had a government shutdown order, I think just about all of you guys in practice had that in 2020. And then, or, did you have a reduction in gross revenue? You might have had that, but I would say it's highly more probable that you guys had a shutdown. I've had several dentists tell me, oh, I don't qualify. I said, yes, you do, because you were subject to a shutdown. They were focused on the gross revenue number. Okay, but there's some wages that don't qualify. First of all, wages paid to related parties where the owner owns more than 50% of the practice. So you're a solo practitioner, you own a company, a PC in this case, you own 100%, your wages don't count. Your spouse, if she's working, doesn't count. I don't know why. It's a series of rules called attribution rules. And even though they didn't worry about related parties for the PPP loan and the forgiveness, for some reason they do here, that's the way it goes. Okay. Wages that are exempt from FICA taxes. So for instance, if you had a cafeteria plan, that reduces your FICA. That doesn't count. How about if you had a 401k plan? Those wages count because they're subject to FICA. Okay, proceeds of PPP. Now I'm going to start getting into the weeds. First or second draw, to the extent they were used to reimburse wages in the PPP loan forgiveness. In general, you only had to use 60% of your loan for wages. But don't forget this. You may have been subject to the shutdown up through May 8th, let's say, and maybe you got the PPP loan on May 1st. That means from March 12th to May 1st, you didn't have any reimbursements from the PPP loan because you didn't have it. So you can see there's some interesting configurations here that we have to go through. Wages used for other COVID relief provisions. We did a webinar on this way back. We talked about people who said, hey, I got COVID, I'm going to be tested, I'm out for a couple days. And if you continue paying them up to $511, you could get a credit for 10 days. Or you had people who basically had child in school, they got locked out of school because of the COVID thing and they couldn't find a babysitter and they had to stay home and take care of the child because of that. And that wound up being basically $200 a day for 10 days, up to that amount, if that's what their compensation was. Now, this is interesting. If it was for you, the dentist owner, and your wife, it counts for that one. It counts for the COVID relief provisions, the Family Leave Act, but it doesn't count for the employee retention credit. Now, the reason I bring all this up is this. A lot of people did not apply for the credit for the Family Leave Act. And you may actually have money sitting on the table. And we're going to talk about amending your returns for payroll for 2020. We might as well go cover all that issue too at the same time. We're finding a fair number of people, a few, but a fair number of people have not claimed it. A few have. So if we're going to go back and take a look at all these payroll returns and compute your employee retention credit, since we have to figure out who's qualified for different things, we might as well take a look at the issue about the COVID Family Relief Act credits too. You might get more than some of the numbers I've been suggesting. Okay, catching up. Here's how you're going to catch up. 2020, fortunately, they are saying that you can catch us up in the fourth quarter of 2020. Those returns are filed, at least I hope you filed them by now. So there's an amended return that has to be done. That's how you catch it up. That's where you say, hey, I didn't take the credit. I want the credit, because these credits go against your payroll deposits is what happens. And then to the extent you didn't have enough payroll deposits, you could have filed at Form 7200 to basically get an advance payment, but you had to do that by the due date of the payroll returns, or when you filed it, they're all due January 31st. So 7200 is out of the picture for 2020. So the only avenue for doing this is an amended 941. We're going to talk about mechanics of that in a moment. For 2021, you can take credits against your deposits. You can get advance payments in the 7200 form. You can still do this before the end of March. Remember, you have to file that 7200 by April 30th. So if anything I'm saying in 2021, maybe you say, I don't think I'm qualifying for the credit for the ERC, but now that Chuck mentioned the thing about the COVID, the Family Relief Act, I just had someone who was off for 10 days and I paid him X number of dollars. You might as well talk with me because this advance payment applies to all that stuff. There's still an opportunity to get it quicker. I'm not excited about filing returns and asking for a refund because some of you guys may still be waiting for your refund from 2020. I am. I still haven't gotten it yet. And I'm not alone. And that was 6 months ago. The paper filings are terrible. So, but the only way you're going to get it for 2020 is you have to file 941 and you're going to have to wait for the money. 2021, a little quicker. Okay, so catching up, how to catch up on the credits. Here is the mechanics of what we're specifically recommending to our clients. I realize not everyone listening to this necessarily is our client. So obviously, if we're not doing your work, you talk to your accountant and ask them how they want to do it. You share this file with them if you'd like to do that. Our recommendation is we file amended 941X for 2020. And what we could do is we could either ask for the refund or we can apply it to next year's deposits, as long as we've done that before your payroll return for the first quarter is filed. I think applying it for a refund, I'm sorry, credit towards next year is going to be quicker. However, we have payroll parties that we got to deal with here. I want to talk about that in a moment. You can't get the advanced credits for 2020 anymore. So that's our suggestion. We filed 941X for the last quarter, roll these things up, and I'm inclined to say let's use it as a credit against each subsequent quarter, but you could apply and ask for the refund and see if it's going to take you 6 months to get it. Okay, payroll processing services. How to work with them. They're all across the board. They're big ones or small ones. Banks have them. Software vendors have them. And when this was first coming out, we really did a quick survey of different payroll providers, including ours, to tell you the truth. I won't mention who that is. And to be blunt, we were highly unimpressed with all of them. I would have thought they would have been on top of this, like there was no tomorrow. And we found when we called up and we started asking pointed questions about how they were going to do this, we had to go through layers and layers of people. They seem to have been caught off guard on this whole thing. Maybe they're cleaning up their act now, but at the time, when we started looking at the reports and the credit reports and the carry forwards, they were wrong. We had one place that didn't even get this thing up and rolling until after January 31st, which means they missed the credits for the whole period. Doesn't mean you can't get them. It just means that whatever they're processing may not be right. We found the reports don't always agree. And on some of these, we say, look, the credit is actually more than what the withholdings are. How are you going to handle the credit for it? And we get silence on the other side of the phone. And some people don't even do the 7200. Now we're understanding some of them are coming out saying, we'll file the 1040Xs. So we're not against them doing that. I'm just saying we need to be cautious about it. I believe it makes sense to have your payroll processing service providers file the amended returns, but it's the data that they get to use to file the amended returns is the issue here. Now, the reason I say that is because you're going to be dealing with them year after year. Numbers carry forward from one year to the other. I think from an accountability point of view, having them file these amended returns fixes the responsibility on any carry forward issues. But what we're telling our clients is before you finalize anything, we want to see the payroll reports. We want to make sure their computations are correct. So when the returns get filed, we don't turn around and discover other mistakes, and you amend to the extent someone says, well, why don't we audit you while we're at this? You got to get it right and get it right the first time. So what we're doing for our clients, if you're not with us, you can have your accountant do this. We're going to be computing what the numbers on the amended return should be. And then we're going to give the numbers to the payroll providers and let them do it. And then we're going to insist on seeing that return before it gets released to make sure it agrees to what our expectations are. That way, it doesn't matter what software you're using. You just want to make sure it's right. And you want to do this once and you want to be done with it. Okay, so for clients, what do we do? If this looks good, then we need to have a discussion and have a little discussion with you about how much you might get back. We can ballpark it, just having a discussion with you. And what's running through our mind is If we're going to get you $1,000 back and it costs you $800, why waste your time on this whole thing? Let's find that out quickly with about a 10, 15-minute phone call. We can pencil it out, and we can tell you, here's about what we think it's going to be, ballpark, and we can give you an idea what the cost might run, and you can decide whether it's worth it to do it or not. Once we do that, we need to talk with your payroll provider, because we will make sure we find out how they're handling this, and we want to make sure they're on board with the fact that we're going to give the numbers to them to put on those amended returns. Okay, so if I went through the numbers and the steps for our clients, again, I suggest you mimic this with your own accountant if you're using someone else. Have a general discussion with us to see if you might qualify for the credits in 2021. The reason for that is if you do, you need to start taking action right now so you can start immediately saving the money on your deposits. And that's something I can do over the phone, and we can just tell you what to do. Now going back to 2019 and the 2020 is what I actually mean here. If you're subject to the shutdown rules, where you have 50% reduction, but I think it'll be the shutdown rules, then we can ballpark it, but there's nothing that says we have to go do it right now. And as you can guess, until April 15th, we're pretty busy. So what we're doing is we're figuring out where this would work. We're setting it up in the queue, and we're coming back to April, after April 15th, to actually work on the amended returns. Okay, so then we talk about your PPP loan. We'll get information from you on the starting date. Did you 8 weeks or 24 weeks? You can see there's a labyrinth of calculations that it's not complicated for us as CPAs, but it's complicated for someone who doesn't do this for a living. And so therefore we're afraid that people just walk away from this because it's confusing. But we have to reduce it for the COVID credits that you took, the family evac credits. Did you take the family evac credits? Oh, why not? Let's take them. And then we got to go through the PPP loan and say, when did it start? When did it stop? And then what's our strategy for, do we have to apply some of that PPP loan forgiveness to some of this amount that we're talking about? The punchline is that would reduce what you're going to get back. We don't want to do that if we don't have to do that. So the questions when we talk with you is, where your operation is fully or partially suspended for dentists. I think we pretty much know when it is, but you may know something we don't, so consider that other times. What was the shutdown period? We believe it'll be from March 12th, probably to May 1st, maybe throw in another 6-7 days open up, perhaps May 8th. Did you have any reduction in volume during that period? Probably not. Okay, but we'll ask that question anyhow. And how does it look for 2021? Most people are saying we're back in the saddle. It's tracking nicely against 2019. So far, no one's had a 20% reduction anticipated in any quarter for 2021. However, if you got a big vacation coming up, maybe there's a little bit of planning you could do, but again, you're probably not from your normal operations going to do it. Here's a few caveats for you. We can start the analysis, no guarantees that upon the final analysis there'll be any sizable refund. Our goal is to keep the computations going and to stop this, that we don't run a meter if you're not going to get anything sizable. Like I said before, some small ones have been 7,500, larger ones have been the 15. We're not talking $40,000, $50,000 here, but we're talking about reasonably easy profit that's worth your time to put into this and have your bookkeeper give us the information. We can do this in about a 15-minute initial phone call to see if this is going to go anywhere at all. And then again, for clients where this will work, we anticipate sizable refunds. Well, I happen to think $15,000 is sizable. Some people may think it's 40, so I should probably have put a number in this slide. You're probably in the $7,500 to $15,000 to $20,000 range is kind of what we're seeing. I can't guarantee that's what's going to happen at all with your case, but that's kind of what we're seeing with dentists. So if you are interested in that, you want to give Kit a call to set up a time with us. Now, are you getting all the credit you deserve? Most people aren't. That's what I'm finding out. I have yet to find one person who applied and got anything for the employee retention credit. I find many people were not taking it for the family leave act. So the odds are you probably didn't either. So if you want to give us a call at this phone number, I'm going to turn it over to Kit in a moment. We'll make sure you get all the credit you deserve. Okay, Kit, for you now, please.
Great. Thanks to everyone watching, and thanks, Chuck, for this informative presentation. If you would like to set up a call with Chuck, please contact us at 602-678-7067. I am at extension 14. Also, you can get a copy of the slides. Email info@rcthornton.com. We invite you to visit our website at rcthornton.com and watch other webinar recordings from our speaker series page. Please let us know if you would like to collaborate on a webinar with Chuck regarding your topic. We would love to work with you. Thanks again and have a great day.